In this video, I'm going to tell you the truth about AT alerts. I'm also going to show you an illustration of an AT alert that turned into a textbook trade as it hit its target. Show you some of the logic and rationale behind putting on that trade. But before I go on, I just have one thing to say. And as our subscribers know, anyone who's not signing up for the Amazing Trader, especially with AT alerts being added to it, is missing out. I've been doing this a long time, and one of the reasons I'm still doing it is because of the Amazing Trader. If I didn't have access to it, especially with the alerts being added, I would stop trading. But in the end, I can only lead a horse to water. I can't make him drink. So, if you want to sign up, either contact me or go to our website, hit the products page, and see what we have to offer. So let's see what I mean about the truth about AT alerts. The truth is that AT alerts are both perfect and not perfect. But the question is, how can they be perfect and not perfect at the same time? Well, from my experience and research and years of trading, there is no holy grail. If there was, and you could just flip on a switch, turn on program, let it do all the trades for you, you'd be sitting on a beach in Tahiti, sipping a pina colada, and watching the cash roll in. But that's not reality. So that's why it's not perfect. But why is it perfect? Well, it's perfect because, let's see, it's perfect because of many reasons. But the one I'm going to focus on is because it provides you with additional information. And the more information you have, in my opinion, the better chance you have of succeeding in trading. So I'm going to give you an illustration now, which proves the point of why I say an AT alert is perfect in this regard. So let's take a look and see what I mean. Why do I call AT and AT alerts perfect? Well, it's a perfect addition to any trader's toolbox. And the information it provides can be invaluable. Let's take an illustration with this Euro Sterling alert from November 3rd, 2023. I'm showing you over the weekend, so it's with hindsight. But you'll see what I mean. The sale was at 87.04 at the opening of this candle here. Stop was above the high of the day, so stop was placed at 87.24. Take profit was 86.79. And that target was hit with no issue. As you see, we came straight down. Now, this is what makes it interesting. After the payrolls report on November 3rd, U.S. payrolls report, the dollar came under sharp selling pressure against every major currency. I was not even looking at Euro Sterling. That was the farthest thing from my mind when an alert popped up with the sale. Now, if you look at the sale here, you had a directional indicator after a period of kind of consolidation. And then we moved down. It's almost a textbook trade. But the question is, what's the rationale? Why would you put this on? Why was this a B trade? Why not a C trade? Why not an A trade? Well, I'll show you what we do. First thing I always do is I compress a chart. If it's a 15-minute chart, I compress it, and then I'll compress the 30-minute chart. On this 30-minute chart, you look at right here, we had the high up here. And then we moved down. We actually broke the support here, and now we're trying to rally again. But we're not hitting this high. So we actually have a directional indicator in here. I'm not sure if this is the high from Friday, but all you had to do, even if you were just looking over here, you could see you could treat this almost like a correction off of here. The point was within this range. You had to take out this high here. So when you saw the directional indicator, it was worth putting the trade on. You'd have to take out this high here to hit any kind of stops. Now if you compress this 4-hour chart, you can see we've been trying to move higher. We've only got our first blue line over here. And this is a fully compressed 4-hour chart. And 4-hour charts are really good to look at, but they'll tell you what the real risk is. We'd have to run at least above here or here to hit any stops on the upside. And that's the key here. If we're not going to run any stops on the upside and we see a directional indicator pointing the other way, why not take the trade? This makes it a B trade. But then if we go down a little further here to a 4-hour chart, you'll see we briefly broke this top of this range here. We came right back below it again. So you've already run the stops above here. You'd have to take out this line over here to run any more stops. If we went down one more, again here, similar thing. We ran the stops, and now we're holding back below it. So there was no follow through above here. So it was worth a shot. But you can see we have room on the downside here. If we're in here, and once we broke this line over here, which is a preceding line, market moved down to test this trend line. But the point was that this is what I consider a B trade. When you look and you compress either the 30-minute chart or even the 4-hour chart, and you see we're not near any key levels here. As long as the high of the day held, especially the second line held, you had a decent risk in that direction, and it was worth putting on. But the key point here is, if it wasn't for, I'll go back to the 30-minute chart, AT alerts, I never even would have looked at Euro Sterling in the aftermath of the payrolls report. And that's why I say it's perfect, because it brings up, we have what, 16 or 18 or 20 currencies. It'll give you alerts to currencies that you can't follow because there are too many to follow, or you're not following, and all of a sudden it hits you, hey boy, this is worth a shot. And that's what I mean by additional information. It's just there, and then you make your decision. In this case, it was worth the risk. You knew what the risk was on the upside. You were not, even if you ran that high, you weren't running any key stops. As long as that high held, at a minimum, you'd be within a range. And as you see here, what it told you, and as you saw that cross continue move to the downside, that there was upward pressure on sterling. So it wasn't just euro sterling, it was sterling. That's why you saw a little bounce of dips in the euro dollar as euro sterling continued to move lower. So it gave you a clue, not only get trade if you wanted it, but also gave you a clue in sterling. You might have wanted to go long sterling with pressure on euro sterling. And that's for another discussion. But the point here is that this is an illustration in the heat of battle, when it's chaos, when the dollar is tumbling everywhere. AT alerts picked out this pattern in euro sterling, one I never would have looked at, and gave you a really good risk-reward trade. There's one principle that guides our trading using AT alerts, is if you have to think too hard to justify an alert, then you just ignore it. It's a pretty simple principle, and the more you do it, the more you'll recognize when you look at a trade, and if it doesn't have any qualities, or you don't like the risk-reward, or the profit target is too far away, you have to break some key lines for it, whatever the reason. If you look at it and it doesn't, even a B trade, A trades are obvious, but B trades, you can't find a justification right away, ignore it and go on to whatever you're doing. Let's look at an illustration what I mean. This is a good one. This is the Aussie yen sell on a 15-minute chart. You can see how we in a range here. And what we're doing here is selling the bottom of the range. We probably had a line here, very tight directional indicator. But the entry was at the bottom of the range. So when you look at this, you got a trend line here. You have a lot of red line support, AT supports here. Selling the bottom of this range. We just ignore it. So I wouldn't even call this a C trade. I just said we ignore this trade completely and move on. And if you went to a 4-hour chart with a similar pattern here, you can see we've been in a range for quite some time. And all you're doing here is trading, in this case, the bottom of an intraday range. And as you look here, there's no momentum in this market right now. I mean, I don't see any momentum with the high up here, low down here, probably selling somewhere in here. There's no incentive to make this trade. So the 4-hour kind of confirmed what we saw in the 15-minute. But this 15-minute by itself, with this really poor entry, was enough for me to say, I'm not putting on this trade. And just ignore it. And then move on to the next one. So the more you do it, the more you will be able to recognize this. And once again, if you have any questions at all, please let us know, send screenshots, whatever. We'll be glad to help you out and move you along. But you can see we had a nice B trade in Euro Sterling, and one that we never would even looked at in that environment of chaos after the U.S. payroll support. And in this case, here's a trade we clearly would have ignored.